Last year was about as bad as it could possibly be for Mexico, maybe the worst in the 21st century. Everything that could go wrong financially did. The peso collapsed, the stock market was unraveling, the bond market was unraveling, and here we are 6 months into the new year, and the peso is the strongest currency in the emerging market. That's 26 countries we're talking about. Is it too good to be true, or do you think there's more to come?
It's actually been a very difficult couple of years for Mexico context-wise. I think that if people had actually looked at what was happening in Mexico, not the last 6 months, but the last couple of years, they would have seen that there was a transformation in Mexico that modified the structure of the economy, that modified the fundamentals, and that would have made the recovery that we've seen relatively easier to forecast. It's been difficult, but if you go back and just compare 2014 to 2016, the headwinds that we faced were quite complicated. One could argue even that they were more complicated than what we saw at the end of last year and the beginning of this one, and yet the Mexican economy continued to perform well. On the basis of that, you could have forecasted that the numbers, that the reactions that we were seeing were not aligned to the fundamentals of the Mexican economy, and they were not aligned to the fundamentals of the U.S.-Mexico relationship.
So traders see actually Mexico growing faster in GDP than any country in this hemisphere by 2019. Do you think that's optimistic?
I think that's realistic, and I think you don't have to go back into, or you have to go forward to 2019. We're going to do better than the Latin American average. We should do better than the US and Canada. We're doing better than the OECD on average. And that's with the headwinds that we've described in 15, 16, and early 17. Some of those headwinds should become tailwinds. Global growth is looking better. The US industrial production is looking better as well. Inflation expectations continue to be well anchored. We're on the tail end of our fiscal consolidation process. So many things that are now a drag on growth in Mexico should become somewhat of tailwinds by probably 18, 19, and 20. So we should do well.
So interest rates are still something of an obstacle. We have higher interest rates.
I think they are. But again, both interest rates, monetary policy and fiscal policy, both have tightened. Both have tightened for good reasons. Mexico had fiscal space, took advantage of it. Now we're going back towards scaling that fiscal stimulus slowly and gradually away from the Mexican economy. But the adjustment that we had to do in 15 and 16 was larger than the one that we still are going to have to do in 18. But once we get to 2.5 deficit, the numbers and the path of the debt to GDP ratio starts moving downwards consistently. So it's a good place to end the administration. And monetary policy-wise, the inflation expectations are well anchored, and what the markets are seeing is potentially another couple of increases this year, but they're starting to predict that the interest rate could start going down as early as the end of this year, probably the beginning of next one. And I think they're right.
So back to growth. What is driving the growth in Mexico? We see that companies here are spending more money, investing more. Capital expenditures to sales is up. It's going in the right direction. It's actually the opposite of the trend in the rest of Latin America.
I think that when one thinks about Mexico, it's natural almost to think about it always in the context of the North American process, of the North American reality. I think that's true. I think that's important. I think that's structural. I think that's happening for fundamental reasons, not just geography, but demography and others. But sometimes that obscures the point that Mexico in and of itself is a big economy. We're probably, just to give a couple of examples, but we're the 6th largest consumer per capita of gasoline. And of the 6th largest, 5th, Mexico being the 6th, markets of gasoline, we're amongst the 3 that are growing at a faster pace. And that's true of almost every single market. So Mexico on its own, given what we are likely to see in terms of our own domestic markets, is an interesting play, is an interesting platform. It's an interesting platform vis-a-vis North America. But Mexico is situated probably as one of the countries that has the most belongings. We're North American by geography and by integration, but we're also a Caribbean country and therefore have access to what is arguably one of the most important touristical assets in the world, which is the Caribbean. We're part of Central America, and Central America is interesting when you look at it. It has more people than Canada. It's growing at 3.5% on average since 2000, which means that Central America now is 60% bigger as an economic region than it was in 2000.
Last year, candidate Trump and then President-elect Trump said about the largest free market trading zone in the world, worth almost $20 trillion. That's Canada, US, Mexico. US is Mexico's largest trading partner. Trade has quadrupled since 1994 when North American Free Trade Agreement was signed. And he said he would rip it up. He said it was a disaster. Is the worst over now?
Well, we think now officially we're in the process of modernizing it, because he actually said that he was going to renegotiate it. He put some other adjectives to it. But if one looks at the North American region, if one looks at the ports, the airports, the railroads, highways, the electricity grid, the oil and the gas pipelines, there's a North American region to which, when you only look at the infrastructure, it's difficult to identify the borders. And one can argue whether that came about because of Nafta, or whether Nafta came about because there were real dynamics that made the North American region something that made sense in and of itself. I mean, Mexico has a lot of free trade agreements, but none of them have resulted in the level of integration that the North American region has seen. So there's something that complements our economies well. NAFTA enhanced it, NAFTA brought it to light, NAFTA probably prodded it along, but it's difficult to argue that it was just NAFTA contingent, and there's probably some core dynamics between our economies that make it reasonable for us to trade, to integrate, to have regional energy markets, and to participate in the global economy as a bloc. And the largest bloc in the global economy will continue to be, for the foreseeable future, the North American economic bloc. We think that there's space to modernize NAFTA. We think that there's scope so that we can do better. Many things that are happening today that would be natural to include in a regional integration program either did not exist, or we did not have the economic capabilities of putting them on the table in 1994, and now we do.